What's going on, everybody? It's Avi back with another episode of Financial Freedom in 15. This one is going to be epic. I'm here with my main man, John Duston. John is a CPA tax specialist. He does my taxes, so I trust him basically with my life. And he's been gracious enough to jump on the show for 15 minutes to talk about tax strategy, tax planning, and kind of just give his knowledge about the space. So, John, thank you so much for joining us.
Certainly. Thanks for having me on.
Awesome, John. Before we get into tax strategy and how people can avoid the IRS, tell us what being financially free means to you.
To me, it means you can choose where you want to work and what you want to be doing, as well as that you have the resources to help those around you.
So, John, why is it so important for people to really take taxes seriously and understand tax strategy?
Um, well, it's one of those things where you don't want to be flying blind. You want to know, okay, what is the implication of these moves? Because depending on what people do, there can be huge consequences. For example, if you get a stock option plan, major change in your tax liability on whether or not you sell immediately. And there's a litany of other items where you want to think about what you're doing before you do it because it could have quite large consequences on your bottom line.
Love it. So a lot of people that watch this, I assume are going to be W-2 employees, which means that, taxes are taken off kind of off the top. I definitely have a lot of real estate and other entrepreneurs that watch this that are more like 1099, like I'm a 1099. But for those W-2 employees who a lot of people probably just think like, oh, I'm just going to have to pay my taxes. There's nothing I can really do to, be advantageous in terms of write-offs. What do you tell those people who are just kind of getting started to learn about the tax game?
Yeah, so when you're W-2, it's a blessing and a curse. There aren't too many options, so it's also simple. Your biggest one is going to be putting money into your 401k. If your employer matches, amazing. If they don't, you still get to defer the income until retirement. It's not a complete write-off like it is in a business where it's your income's just decreased. It does end up catching you back up when you retire, but at that point, your taxable income and tax rate should likely be lower, as well as you've also now had time to grow that money. Then also there's a few other options like HSAs that you may want to look into, which are health savings accounts with high deductible insurance plans, which you can run the numbers on, but unfortunately those are not recognized as California. They just act as a normal brokerage account here. But for federal, they're still great. But for the most part, it's pretty simple. It's just what are you going to be investing with, as well as we can carry into this into another question, I'm sure, but real estate, depending on your taxable income, could be a great item to get your tax liability down.
Let's talk about that. Explain that to people that maybe are still renting and they don't know the tax implications of owning real estate.
Yeah, so the tax implications of real estate depends upon what use you have for it. So if you buy real estate to live in it, now we may be getting something called itemized deductions. Now, with our last tax code, itemized deductions became less prevalent because the standard deduction was higher, and you either take the itemized deductions or the standard deduction, not both. But for California, if you own a house, you're going to be itemizing, and it will certainly help you decrease your taxes. But the way that I typically talk to people about itemized deductions is I go, this isn't one of the decision-making factors. It's a nice cherry on top. Sometimes it's a very large cherry on top, but I tell people if it doesn't make sense to buy the house, don't be coming to me to justify it. Like I will want to be the guy that gives you good news at the end of the year, not really going, is this how are you on this kind of margin to buy the house? And then if someone comes and they go, "Oh, I want a investment property," well, they can either have it as a business and short-term Airbnb it like you're doing, or they could have a long-term tenant in there. In which case, let's say in a high market like we're in with lower cap rates, they might cash flow like 100, 200, maybe even 500 a door. But we can write off a portion of their purchase price or their basis in it as depreciation every year so that it oftentimes will show up negative on their taxable income. And depending on where their actual like W-2 income is, we may be able to write off a portion of that and get their income even lower. Otherwise, it carries forward to future years.
I love it because so many people, when you talk about the benefits versus homeownership versus renting, a lot of people just think about, oh, you're going to be, paying yourself, you're going to be building equity. But a lot of people don't remember the tax benefits of owning real estate. So it's a great reminder. And if you have questions, come to John, come to me. We can chat about that in more depth. But let's talk about, okay, so if a W-2 employee, there's a lot of benefits, right, as a 1099 in terms of write-offs. Can a W-2 like start a side hustle or a side business to sometimes capitalize, let's say consulting, or capitalize on the benefits of being a 1099, like having write-offs like travel and other expenses? Can you touch on that for people who maybe want to jump into that mixed space?
Certainly. So there's what we call it a Schedule C. They just give them letters to put them in order, but it's for sole proprietors or people running their own business. So you're going to be using the same schedule whether you're a big guy or a small guy just doing a side hustle, as long as you don't have some entity like a corporation up and running. And it's the same exact deal, it's just on a smaller scale. So you'll be putting your income there, and then you can offset your expenses. Like, let's say you're meeting with clients and doing meals, so you can write off 50% of those meals, and you can write off miles to drive there, and you can write off advertising, supplies that you buy. If you have to buy a new printer or a laptop, you can write off a portion or all of it. Um, the big one though is, regardless of if you're doing 6 grand, 60, or even more, I would recommend setting up a separate bank account, because the accounting will almost take care of itself. You go, okay, how much did I make? All the money went into the account. I just look at how much went in. How much should I spend? It can deduct. Well, the money that just went out of the account. And oftentimes people spend with credit cards. So I got, like, personally, I have 4 cards in my wallet. I got a debit card for myself, a credit card for myself, a debit card for the business, and a credit card for the business. And then in the moment, you make the decision on what to do.
Yep.
Because if you're one of those guys that waits till year end, it's going to be rough.
Yeah. I just want to talk personally about how much you've helped me. Before I was working with you, I paid my taxes just once a year. Now we're paying my taxes quarterly. I set up an LLC and I pay myself as a member of the LLC, which is a full write-off. John tracks all of my deductions, which add up to a good amount. When you're a realtor, you have a lot of business expenses. And basically, you're helping me net so much more money than if I was just going at it alone. So I think it's also really important to talk about who you work with. It matters. And if you're going to start to make a lot of money, let's say in your side hustle or as an independent, I think it's important to find a great CPA, and it's worth the investment.
Yeah. And then especially something that we have you actually doing is your LLC. We have it elect to be taxed as S corporation, which is something a little bit more advanced. At the point you're thinking about an S corp, you probably already have a CPA and they'll bring it up for you. So a little outside of the scope here, but yeah, it turns into a bit of a rabbit hole. You just need to know where to start.
Yeah, for sure. One question I had from, I reached out to my audience and people were, I said, ask questions. One that was important. So many people are working from home. Let's talk about home office deductions. Who can deduct, how can you deduct that? And what are the possible, implications for setting up a home office?
Yeah, so the big thing with a home office is that it's an area that you only use for business. Like currently, I'm working in front of my bookshelf. Sometimes I work on the living room table. And then sometimes I work at a desk in my bedroom. But I don't do any other work in front of the bedroom, whereas the bookshelf stores my books. I eat on the table. So when I do my office and home deduction, even though I work at all three of these locations, I only deduct for the area that I exclusively use for business. So it is a bit of a hot topic for the IRS, or it has been in the past. You could speculate on whether or not it's going to become less of a hot topic item, just because there's so many more people doing office and home expenses this year because so many people work from home.
Yep.
But the way that your office and home expense gets treated depends upon the type of income that you have. If you have self-employment income, like you're the sole proprietor or have an LLC, well, then it's going to be coming through as a direct expense. You're going to take all your expenses for your housing, utilities, rent, insurance, repairs, and you're going to take those and you're going to take them by the percentage of the house that you use. So I'll take my desk over there divided by the whole entire house square footage. Now I have my percentage. It's
Hmm.
in like the teens, which is pretty normal. And then I times that by my total expenses, and there's a schedule that this all goes on, and that's going to be my deduction. But for people who are W-2 or have a corporation, it's going to end up as which they and they got rid of that for federal, but it's still a thing for California, which a lot of people miss. And so if you're itemizing for federal and you have like investment advisory fees as well, there's a good chance we could be taking it still on California, even if you're just a W-2 guy.
Got it. Awesome. Okay, another question I got from a fellow realtor. He asked, when is the right time to set up an LLC and start to pay yourself out of that LLC? Like, when is the right time to take those next steps to kind of build out your tax strategy?
Yeah, so the big thing with an LLC is that it doesn't affect your tax liability at all. LLCs are one of the tools that we use for liability protection. I oftentimes tell people to talk to a lawyer, but I got a great lawyer who I refer people to, and I could actually set you guys up for an interview. But I love him because people will talk to him and they go, "Oh, I want to set up an LLC," and goes, "No, what you want is an insurance agent." And then later you come back to me if you think the liability is bigger.
Got it.
Um, but setting up something like an S corporation, that depends on what income you expect to have for the rest of the year.
Mhm.
And oftentimes the best time to set these up is January 1st, because if you set it up in like November, you actually still have a tax return for November and December. And now you have to pay to file a tax return, which includes software, professional fees. It takes time, and in California, that can oftentimes be an $800 annual fee, and adds up pretty quick. It could be $1,000 to wait 2 months to do it,
Got
but
it.
depends on each individual person's situation.
Good answer. My roommate, shout out Dallas, he's a business attorney as well. So he's my go-to guy. He did my LLC, and it's great to have your accountant and your business attorney link up and be on the same page when you're setting up LLCs and stuff like that.
Yeah,
Another,
especially because these guys have perverse different incentives. I
yeah,
want to save you money. He wants to save your butt.
I love it. Yeah. Great. It's great info just to surround yourself with a good team. And whether you're buying a house, whether you're finding a realtor, a lawyer, or a CPA, do your research, read the reviews, and use people that you know and trust. Me and John met back at UCSB through the entrepreneurship program, and it's been awesome to be someone that you can trust, you can grab lunch with, but they're also saving you big change when it comes to the IRS. That's another question. Speaking of the IRS, I had my buddy Veer, shout out to Veer. He asked, how can I run from the IRS or avoid the IRS?
Oh, well, number one is don't give your name on the interview question. But I mean, in terms of running from the IRS, I have no idea. That's not what I do. When
It's
I
an
get people
executive.
who they try to ignore the IRS and they end up showing up at my office with a like 3 or 4, sometimes even like 8 letters from the IRS and FTB asking for a tax return. They go, "How do I deal with these?" And I go, "Well, file your tax return and pay the taxes." Like
Yeah.
the biggest one is to not have them want to chase you in the first place.
There you go. Yeah, I think it's important to have a strategy in place, because even for people that I know, realtors, independent contractors, who are making huge money, but they don't have the strategy. They don't know how much they're going to be paying quarterly. And then the tax bill winds up hitting them square in the butt, come tax
Oh
season,
yeah.
and they can't pay it. And then they owe back taxes. And it's like, it's really not about how much you make, but it's about how much you invest, how much you save, and having a strategy and a person in place to help you with that is the way to go.
Yeah, and I mean, if you're watching this and you go, "Oh, I wonder if I'm gonna get hit with the big tax bill," the answer is yes. Like, because most people think, "Oh yeah, taxes are linear. Like, the more I make, the more I get taxes." Like, no, the more you make, the more income there is to tax, and the higher the tax rate that it's being taxed at. So it's exponential. Like, it hurts.
Yeah. Get a plan in place, find a great CPA, I think is the moral of the story. That's about our time. But if people want to learn more, if they want to chat with you, pick your brain, get their tax strategy going, start a side hustle so they can write stuff off, where's the best place to reach you?
Send me a connection on LinkedIn. It's just John F. Duston, or you can send me a text. We'll put the number in the show notes,
Yep.
and yeah, we can also throw the email in there as well. Gonna get a website up very soon, so that's a great one too.
Awesome. Anything else for the millions of people watching this that you would like to touch on, and give your final tax advice?
Um, I really reiterate setting up a separate bank account. A lot of people hear that, doing it's another deal, but it makes your life a lot easier. Biggest bang for your buck is not paying anything and just spending half an hour on getting that bank account set up.
Yep. Well, John, thank you so much for taking the time to jump on Financial Freedom in 15. I appreciate all the work you do for me and keeping me safe from the IRS. And I'll look forward to seeing you soon. And thanks again for jumping on.
Certainly. Take care.
Take care.